Services trade, while not directly subject to tariffs, is also expected to be adversely affected. Declines in goods trade will reduce demand for related services such as transport and logistics, while broader economic uncertainty is expected to dampen demand for travel and investment-related services. As a result, the volume of global services trade, and I should stress it's the volume, not the value, is now forecast to grow by 4.0% in 2025 and 4.1% in 2026, well below the baseline projections of 5.1% and 4.8% without the tariff changes.
We project that global merchandise trade volumes will decline by 0.2% in 2025, nearly 3 percentage points below the level we would have expected without recent trade policy shifts. This downward revision reflects the combined impact of newly introduced tariffs and heightened uncertainty affecting trade relations with the United States. A reinstatement of reciprocal tariffs would shave 0.6 percentage points off this forecast, lowering the projected growth rate to minus 0.8%. This is almost the 1 percentage point contraction we mentioned a couple of weeks ago. Now, a broader spread of policy uncertainty beyond U.S. trading relationships would reduce growth by another 0.7 percentage points, implying a total decline in global merchandise trade of 1.5 percentage points in 2025 if both downside risks materialize.
Between the U.S. and states who are subject to.
And so if we have contraction in global merchandise trade growth, the concern is spillover into raw GDP growth, as Ralph mentioned. And we've seen that the trade concerns can have negative spillovers into financial markets, into other broader areas of the economy. But I'm also very concerned about impact on poor countries, the developing countries. And we really need to think about that. The global figures I just quoted lies a sharp projected decline in U.S.-China bilateral trade. We currently estimate that merchandise trade between the two economies will fall by 81%, a drop that would have reached 91% without recent exemptions for products such as smartphones. So without the smartphones, 91%, with that exemption, 81%. And this level of a drop in U.S.-China trade of the magnitudes we are talking about is virtually tantamount to a decoupling of the two economies. Whilst U.S.-China trade accounts for only around 3% of world merchandise trade, a decoupling between the two major economies could have far-reaching consequences. If it were to contribute to a broader fragmentation of the global economy along geopolitical lines into two isolated blocks, our estimates suggest that global real GDP would be lowered by nearly 7% in the long term. This is quite significant and substantial.